Welcome to the deep dive. Today we're going behind the scenes at Kaynes Technologies.
Oh, interesting.
Yeah, they're a cutting-edge company doing some pretty cool stuff, not just in India either.
Globally.
Yep,
Yeah.
worldwide. And you guys sent us a recording of their Q3 FY25 earnings call.
I did, yes.
And, well, let me tell you, it is packed with details.
Also to unpack.
Yeah, we're talking financials, growth projections. They even give us a glimpse of their global ambitions.
I always find it fascinating to see how companies navigate, today's economic climate.
Right.
And, especially interesting is how they're keeping profitable, while they're growing so fast.
Right, because not everyone can pull that off.
Exactly.
Okay, so let's get into it. First up, their financial report card, how'd they do? Well, for the first 3 quarters of FY25, they reported a pretty big 49% year-over-year revenue growth.
Wow.
Yeah, that's 17,373 million rupees.
That's a big number.
And their operating profit, also called EBITDA, saw a 53% jump year-over-year, hitting 2,431 million rupees.
Healthy.
Yeah, things are looking pretty good.
Yeah.
So let's zoom in on just Q3 FY25. Their revenue hit 6,612 million rupees.
Okay.
That's a 30% increase year over year.
Wow.
And then EBITDA for Q3 landed at 940 million rupees, which is a 35% jump, again, year over year. And both their EBITDA and PAT, that's profit after tax, margins are looking healthier than last year. So, I mean, this is impressive as it sounds.
It really is. Seeing this consistency, across these key financial metrics tells me they're on, a solid upward trajectory.
Right.
So it really suggests they're doing a lot of things right.
Okay, so next, let's talk about their order book. And you might want to hold on to your seat because this thing is, it's overflowing.
Oh.
At the end of Q3 FY25, their order book was at 60,471 million rupees, up from 54,228 million the previous quarter.
Wow.
Yeah, that's a lot of future business lined up.
That's impressive.
So Kaynes is riding this wave of demand, right, in sectors like industrial, EV, aerospace.
Right, yeah, areas our listeners are definitely following.
Exactly, and automotive.
Okay.
And they secured several large orders in these areas. And their average monthly order inflow went up to 4,285 million rupees in Q3.
Okay.
Up from 3,188 million in Q2. I mean, what's driving this? Are they just lucky?
I think it's more than just luck. I think it's that their strategic focus on these, high growth sectors, it's paying off. They've targeted the right markets and they're delivering what customers want.
Smart.
Yeah.
So looking ahead, they anticipate exceeding 55% year-over-year growth in operating revenue for all of FY25.
Ambitious.
Yeah. They're not slowing down.
Yeah.
And they've projected revenue to land between 2,800 and 2,900 million rupees for FY26. So the momentum is clearly there. But can they keep this up? What do you think?
Well, that's the big question, isn't it? It
Right.
will definitely be a challenge to keep this level of growth going. But their order book and their strategic moves so far, I think, suggest they're in a good position to do it.
Okay, so now let's switch gears and talk about new initiatives. Kaynes Technology is pursuing some new ventures, including building brand new factories.
Really?
Yeah. So are they spreading themselves too thin? Or is this a smart move?
It depends what they're doing.
Right.
Yeah.
So first, they're setting up an OSAT factory in Sanand, Gujarat.
Okay, and OSAT is?
OSAT stands for Outsourced Semiconductor Assembly and Test, basically helping other companies package and test their microchips, which is a pretty big business right now.
Right, yeah, that's a hot area.
Huge.
Yeah. And
then they're also building an HDI PCB factory.
Okay.
High-density interconnect printed circuit board factory.
Yeah, gee.
Yeah, no, in Oragadam, Tamil Nadu. Both are under construction right now.
Yeah, big investments.
Yeah, huge investments.
Oh.
So are they betting too big?
Well, these ventures, particularly in, cutting-edge fields like that, like semiconductor assembly, well, they put them in a good position to capitalize on some of the fastest-growing segments in tech.
Right.
I think these are smart strategic bets.
Like they're getting the picks and shovels ready for the gold rush.
Exactly. Yeah, they're providing the essential building blocks for all this new tech.
So they're expecting revenue from these factories to start coming in Q4 FY26.
Okay.
But wait, there's more. They're also diving into smart meters with a factory in Hyderabad.
Interesting.
That's already producing those meters.
So they're not wasting any time.
Nope. And they acquired a majority stake in Sensonic.
Oh, I know them, yeah.
An AI-based railway network safety company, global company.
Real interesting company.
So they're not just making things, they're getting into like cutting edge AI too.
It's a big leap.
Yeah.
So, I mean, these moves, they're not just participating in the tech revolution, they're actively shaping it.
Right.
Ambitious.
Yeah.
Very ambitious.
And speaking of smart meters, that's another example of how they're thinking ahead, right? So for you and me, that's more efficient energy, maybe even lower bills.
Right.
But for them, it's a massive and growing market, and they're positioning themselves to be major players.
Smart.
All right, let's get down to brass tacks. Profitability and margin outlook.
Okay.
Growth is great, but it has to translate to profits.
Exactly.
So even with, the costs of hiring new teams and launching these ambitious projects, they say they're confident they'll exceed their 15% EBITDA margin target for FY25.
Okay.
What makes them so sure they can do that?
Well, it comes down to their business mix. They've got a balance, right?
Mm-hmm.
With those higher margin projects
Uh-huh.
in, those sectors we talked about, industrial, aerospace, medical, and that really boosts their overall profitability.
So it's not just about growing revenue, it's about growing the right kind of revenue, being selective.
Absolutely.
So they also expect their gross margins to remain stable. And they're projecting operating margins between 15 and 16% for FY26.
Not bad.
Pretty good, right?
It's impressive they can aim for those margins while scaling up these new projects, which often come with, growing pains.
Exactly, and cost overruns.
Exactly.
It's risky, but it seems like they have a knack for balancing growth with profitability.
A very delicate dance.
For sure. Now, let's turn to their global aspirations.
Okay.
They're aiming to increase their export share to 25% by FY26. That's a big jump. Why the push for exports?
Well, it tells us they're not content to just be a big fish in a small pond.
Right.
They want to be on the world stage, and frankly, that's where a lot of the growth is these days.
Exactly. Got to diversify those revenue streams, right? Especially with all the uncertainty in the global economy right now.
Exactly, yeah.
So they're also exploring acquisitions in North America, Europe, and South Asia. Sounds like a shopping spree.
It does, but it suggests a careful approach. They're not just chasing growth for the sake of it. They want to build something that will last, globally.
So they're being strategic about it.
Exactly.
Not just buying whatever they can get their hands on.
Right.
So these acquisitions will likely focus on companies with revenues between $25 and $50 million.
Okay.
Companies that are, already profitable, that have businesses that align well with what Kaynes is already doing.
So finding the right fit.
Exactly. Finding those perfect puzzle pieces.
Right.
Okay, let's talk money. Capital expenditure, or CapEx,
right,
and funding. How are they going to pay for all this? Well, Kaynes anticipates significant CapEx over the next few years, totaling around 4,800 crore rupees by FY28, FY29. That's a lot.
Yeah.
A big part of that, 3,300 crore, is for the new semiconductor assembly project.
Right.
But here's the thing, 70% of that is covered by government subsidies.
Interesting.
Yeah, so they're getting some help from the government. The HDI PCB project needs a capex of 1,400 crore, and 60% of that is coming from government subsidies as well.
Wow. So they're really leveraging those government incentives.
Yeah. So is that a good long-term plan?
It's smart for now, for sure.
Right.
Especially in a capital-intensive industry like this, like semiconductors.
Yeah.
It helps them, stay competitive.
Makes sense.
But
yeah,
you do have to wonder what happens if those subsidies go away.
Right.
Something to watch.
Definitely something to keep an eye on.
Yeah.
And to secure funding for future moves, things like acquisitions, developing their own designs in-house, which is called original design manufacturing, and expanding into new tech niches, they're planning what's called a QIP.
QIP.
Yeah, Qualified Institutional Placement.
Oh, okay.
So basically, they're going to some big investors and saying, hey, want to get in on this?
I see.
So, I mean, it's a common way to raise capital.
Yes, yeah.
And it signals that they're, attractive to investors and that these investors see the potential here. Yeah. And it's interesting, right? Because they're not just assembling parts anymore. They're aiming to be, the creators, the innovators.
It's a big shift.
Huge.
Yeah.
And they're doing it in these specific niche areas.
Yeah, that makes sense, right?
Yeah.
They can really establish themselves, as leaders in those specific areas.
It's like they're saying, we're not going to be a jack of all trades. We're going to be masters of these, specific domains.
Right.
And it's worth noting that they're also putting their money where their mouth is when it comes to diversity and inclusion. They're proud of how many women are on their team.
I like that.
Yeah. And a lot of their big factories are led by women.
That's fantastic to see.
Right.
Not just the right thing to do.
Yeah.
It also makes good business sense.
Yeah. Absolutely.
Diverse teams bring more to the table.
For sure.
More innovative, more adaptable.
Absolutely. It's a sign they're thinking long term and trying to build a better future. Not just chasing profits, right?
Right.
Trying to build a better world.
Definitely.
So we've covered a lot. Financials, expansion plans, these new ventures. They're firing on all cylinders.
They are.
But we're not done yet. We're just getting started. So stay tuned because in the next part of this deep dive, we're going to look closer at some of the key insights from the Q&A portion of the earnings call.
Oh, juicy.
That's where things get really interesting.
Can't wait.
Yeah, we're going to unpack those questions, see what answers they had up their sleeves.
Sounds good.
Don't go anywhere.
We'll be right back. Welcome back to the deep dive. We're digging deeper into Kaynes Technologies.
Yeah, that ambitious Indian tech company.
Right. And, really getting into their earnings call Q&A.
Putting on our analyst hats.
Exactly.
One thing that really jumped out at me was their talk about margins.
Okay.
They seem pretty confident about exceeding their 15% EBITDA margin target. For FY25, even with all the new hires and the cost of these new projects.
Right. It does sound, almost too good to be true.
Yeah. What's the catch?
Well, remember, they're focusing on, those higher margin projects.
Right.
Particularly in, industrial, aerospace, and medical.
Uh-huh.
That helps.
It's about quality over quantity. Right. When it comes to revenue.
Yes.
But they're banking on this thing called operational leverage.
Right.
Can you explain that for those of us who aren't, finance wizards?
Sure. Basically, it means that as their revenue grows, from these new initiatives, their fixed costs, they get spread out over a larger base, so their profitability increases even faster.
Okay.
Think of it like baking a bigger cake.
Okay.
The cost of your oven stays the same.
Right.
But you can sell more slices.
Okay, so bigger cake, more slices.
Exactly.
Got it.
Yeah.
They mentioned their new team's revenues would really start ramping up from Q4 onwards. So, that seems like a key factor in their margin outlook, right?
It is, yeah.
Patience is key.
Patience, exactly. They're playing the long game.
The long game, yep. You see that a lot with companies that are focused on growth.
Speaking of the long game, their capital expenditure plans, they're pretty eye-popping.
They are, yeah.
They're anticipating significant CapEx over the next few years. But a big chunk of that is covered by those government subsidies.
Right.
So it makes you wonder, though, is this dependence on government support really a sustainable strategy long term?
It's a fair question.
Yeah.
Relying too much on subsidies can be risky.
Right.
But you also have to remember that governments, they use subsidies a lot, to foster growth in certain industries.
Right.
So in this case, it seems like they're aligning with the government's priorities.
Yeah.
They're not just taking a handout. They're actually helping India, advance technologically. So it's a bit of a double-edged sword, right?
It is.
It could be helpful in the short term, but potentially risky if those subsidies go away.
Exactly.
So let's talk about their global expansion plans.
Okay.
Particularly those acquisitions they're eyeing in North America, Europe, and South Asia.
Ambitious.
It's a bold move, going on a global shopping spree like that. What's the thinking there?
Well, they've said they're not just acquiring for the sake of it, right? They're looking for companies that fit their strategy.
Uh-huh.
Companies that can help them expand their reach,
Yeah.
enhance what they offer, and get into those new markets.
Makes sense.
It's very targeted.
They mentioned focusing on companies with similar profitability, complementary business lines, and revenues in the $25 to $50 million range.
Yeah, so they're looking for companies that are already doing well.
Right, exactly.
But could do even better as part of Kaynes.
Finding those perfect puzzle pieces. And their goal of increasing their export share to 25% by FY26
Right.
really shows their commitment to going global, right? It's about diversifying revenue, not putting all your eggs in one basket.
Especially in today's world.
Exactly.
Yeah.
Now, their move into original design manufacturing, or ODM,
Right.
is another signal that they want to move up the value chain.
Yep.
What does this shift tell us about their ambitions?
It tells me they don't want to just be assemblers anymore. Right? They want to be creators.
Okay.
Innovators.
Right.
And ODM lets them, have more control over design, over manufacturing.
Okay.
And that can lead to, higher margins.
Yeah.
And they can really set themselves apart in the market.
So they're taking control.
Taking control, exactly.
Of their own destiny. And they're doing it in those niche areas where they can really be the leaders.
Exactly, yeah.
Now, speaking of smart moves, their decision to raise funds through a QIP, that's another strategic play. Can you walk us through what a QIP is and why it's a good fit for them?
Sure. A QIP, or Qualified Institutional Placement,
Right.
is basically a way for, companies that are listed to raise capital by issuing shares to a select group of institutional investors.
Okay.
So, think pension funds, mutual funds, insurance companies. It's a faster process than a traditional public offering.
So they're going to the big players in the investment world saying, hey, invest in us.
Yeah, we're a good bet.
And the fact they're doing a QIP suggests these big investors are buying it, right?
They are, yeah. It's a vote of confidence.
They see the potential.
They do.
So ambitious growth plans, strategic acquisitions, moving into higher margin businesses, attracting big investors.
Right.
Everything seems to be going well for them.
It does.
But it can't all be, sunshine and rainbows.
No, of course not.
What are some of the potential challenges they might face?
Well, the global economy is always a bit of a wild card.
Right.
Things are a bit volatile right now, and that could have an impact.
Right.
But so far, they've shown that they can navigate tough times.
They have a pretty diverse business model, right? Exposure to different sectors.
They do?
It's like having a portfolio of stocks.
Exactly. Not putting all their eggs in one basket.
Right, exactly.
Makes them more resilient.
But competition, the tech industry is, it's a tough place to be.
Oh, it's a jungle out there.
Yeah, with big companies and new startups all fighting for, market share. How does Kaynes stack up against the competition?
Well, competition is definitely fierce.
Yeah.
But they do have some advantages.
Okay.
They've got a strong track record. They've got loyal customers, and they really understand the Indian market.
Right.
They've been around.
They're not new to this.
They're not new to this.
No, and their focus on innovation, right?
I know.
Those ODM capabilities we talked about.
Right. That gives them an edge.
Yeah.
They're not just competing on price.
Right.
They're competing on value, on what makes them different.
They're bringing something new to the table.
Exactly.
And we can't forget about their commitment to diversity and inclusion.
Right. That's huge.
Yeah. These days, companies that can attract the best talent, well, they have a big advantage.
Absolutely.
And Kaynes, their focus on creating a diverse and inclusive workplace, well, that makes them attractive to talent.
For sure.
So they've got a lot going for them.
They do.
But the road to success is never easy, right?
Never is.
What are some of the specific bumps they might hit?
Good question.
So remember how they mentioned those delays they faced in certain sectors?
Yeah, particularly railways and those outdoor projects.
Right, and they blamed those on external factors, right?
Yeah, things like elections, project slowdowns.
Things they can't control.
Right, out of their hands.
But delays can be costly.
They can be, yeah. They can hurt profits.
And throw off their growth.
Exactly.
But they were confident those were just temporary setbacks, right?
They were, yeah.
They said the orders are still there, and they're catching up.
So, something to watch.
Something to keep an eye on.
But not a reason to panic.
Right. And their overall order book growth is a pretty good sign, right?
It is.
That the demand is still there.
Yep.
And they're not just winning any orders, they're winning those, big multi-year orders.
Right. That provides a lot of visibility.
Yeah, that steady revenue.
Investors love that.
Exactly.
Yeah.
And their entry into, new markets like those smart meters. And the AI-based railway safety, that also diversifies their revenue streams. Yeah, spreading those bets.
Exactly.
Which we talked about. It's a good way to manage risk.
Absolutely.
Speaking of spreading bets, that acquisition of Sensonic.
Oh, right. Yeah.
That AI-based railway safety company.
Really interesting.
It's a good move, right?
It is, yeah.
It aligns perfectly with their focus on cutting edge tech.
And expanding into new markets.
Exactly.
It shows they're not just, following the latest trends. They're really thinking long term.
And their smart meter factory in Hyderabad, it's
Yeah.
already producing, turning those things out.
Good sign.
Yeah, it's a good sign that they can actually deliver on these new ventures.
Right, they're not all talk.
They're walking the walk.
Exactly.
Now, those OSA and HDI PCB factory plans,
Food plants.
they gave us some more details during the Q&A.
Okay.
Sounds like those facilities are going to be big revenue generators starting in Q4 FY26.
Okay, so a little ways off.
Still a bit away, yeah, but they're laying the groundwork.
Makes sense.
And they've already started construction, right?
Yeah, they're committed.
So that shows,
They're serious.
Yeah.
Yeah.
And their confidence about getting those government subsidies for those projects. It reinforces their strategic alignment, right?
Yeah, with the government.
Yeah.
It's a win-win.
Exactly.
They get financial support. The government gets to, boost a key industry.
Now that QIP they're planning, they talked a bit about their funding strategy during the Q&A.
Okay.
And it sounds like they're looking to raise funds for a lot of things. Acquisitions, ODM, expansion into new areas.
Ambitious.
They've got big plans, and they're being smart about getting the money they need.
They're not waiting for opportunities to come to them.
Yeah, they're making their own opportunities.
Okay.
It's their story to write,
I like that.
No, it's not all about, the numbers and the strategies.
Oh, yeah.
There are people behind all of this.
Of course.
The earnings call, it featured several members of their management team.
Okay.
And each of them, they provided some really valuable insights. And you could really sense their passion, their expertise.
That makes a difference.
Yeah, this isn't just a job for them. They really believe in what they're building.
That's so important,
Right.
When you have leaders who are that invested,
Yeah.
it really trickles down.
We heard from Mr. Ramesh Kaynes, the managing director.
Yeah.
He talked about their focus on, those high growth sectors and their confidence in exceeding those margin targets. He seemed very optimistic.
She did, yeah.
And Mr. Jaram Sembat, the director and CFO, he gave us a really detailed breakdown of their financials and those CapEx plans. He knows his numbers.
He does.
And then Mr. Rajesh Sharma, the CEO, he shared his thoughts on their new initiatives.
Right, like the OS and HDI PCB factories.
Right, and the smart meters. He's really plugged into, the tech world.
He is, yeah.
And his perspective on diversity and inclusion was really inspiring.
It was.
It's clearly a company that values its employees.
And wants to create a great place to work.
Exactly.
Yeah.
So you've got a strong leadership team.
They do.
Guiding them towards these ambitious goals.
Definitely.
But their success, it's not just about them, right?
What do you mean?
It's a reflection of something bigger.
Okay.
What does their journey tell us about, India's role in the global tech world?
That's a good question.
Yeah.
Well, I think they're part of a new wave, right?
Yeah.
Of Indian companies that are, challenging the big global companies.
Yeah.
And really making their mark.
We're not content to just follow, right?
No, they want to lead.
They're showing the world that India can compete.
And win.
Yeah.
On a global scale.
And their success is inspiring a new generation, right?
Absolutely.
Of entrepreneurs and innovators.
Are showing the world that India is a force to be reckoned with.
Exactly.
Yeah.
So Kaynes Technology's story, it's a story of ambition, innovation, resilience.
And of India's rise.
Yeah, as a global tech powerhouse. And it's a story that's still being written.
I like that.
So we've covered a lot in this part of our deep dive.
We have.
But there's still more to explore. So stay tuned for the final part of this episode.
Can't wait.
Where we'll delve even deeper into their strategic moves, the competition they face, and their outlook for the future.
Looking ahead.
We'll analyze their strengths and weaknesses, assess their chances of reaching their goals, and discuss what it all means for, the investor, the consumer, the tech enthusiast.
Sounds good.
Don't miss it.
We'll be right back.
Welcome back to the deep dive. We've been really getting into the details of Kaynes Technologies.
Yeah, that ambitious Indian tech company.
Right. And now in this final part, we're putting on our analyst hats, and looking ahead.
The crystal ball.
Yeah, exactly. So what's the competitive landscape like for them? And what does the future hold?
Well, the global tech sector, I mean, it's incredibly competitive, right?
Oh, yeah.
You've got, those huge companies and those small startups all fighting for market share. It's tough out there.
So how does Kaynes stack up? What are their strengths, their weaknesses? Can they really, hold their own against these big players?
Well, one of their, I think, biggest strengths is their understanding of the Indian market.
Mm-hmm.
That's really important. They've got a good reputation, for quality, for reliability,
Mm-hmm.
and they've got loyal customers.
Yeah, that's a good foundation.
It is. It gives them a solid base to build on.
And they're not just playing in one area, right? They're in industrial, EV, aerospace, medical. Those are all high growth areas.
Huge potential, yeah.
Huge potential both in India and globally.
Yep.
They're riding some pretty big waves.
Big waves, and they're not just riding them either.
Right.
They're investing in the technologies that are, shaping the future. Things like semiconductor assembly,
Yeah.
HDI, PCB manufacturing.
Right.
Those are strategic moves, I think.
Yeah, it's like they're saying, we're not just going to be consumers of tech, we're going to be the creators.
Exactly.
And their commitment to ODM.
Right, to designing their own stuff.
Right, that strengthens their position even more, right?
It does, yeah. It gives them more control, more flexibility.
Right.
And they can set themselves apart, from the competition.
So they're not just assembling, they're innovating.
Exactly, yeah.
And those strategic acquisitions, especially those companies that complement what they're already doing, I mean, that's smart.
Very smart.
It's like they're building a puzzle, right?
Mm-hmm.
Carefully choosing each piece.
To create the bigger picture.
Exactly.
Yeah.
But even with all these strengths, there are always challenges, right?
There is, yeah.
So what are some of the potential weaknesses they need to be aware of?
Well, one, I think, is their lack of global brand recognition compared to, some of the really big companies out there.
Yeah, the big guys.
Yeah, they're relatively new on the global stage, right?
Uh-huh.
And building a brand, that takes time.
Yeah.
It takes effort, and it takes a lot of money.
So everyone knows, the big names.
Mm-hmm.
But Kaynes, they're still, building that reputation outside of India.
They are, but they are working on it.
They are, yeah.
With their global expansion, the acquisitions, they're making the right moves.
And another potential challenge is just the risk that comes with growing so fast. Sometimes growing too quickly can cause problems.
Yeah, you can stumble, right?
Right. It's like trying to, eat a whole pizza in one bite.
Exactly.
You might choke. It might choke.
So it's a balancing act, right?
Exactly.
They have to grow quickly
Yeah.
to get that market share,
Uh-huh.
but they also have to be able to handle that growth.
You're right. Without losing control. Right. Exactly.
But they've done pretty well so far, right?
Have.
They've integrated companies, they've launched new things, and they've stayed profitable.
Yeah, they seem to be able to handle the pressure.
They do, and I think their leadership team, their focus on doing things well, that'll be key.
Yeah, it's not just about the plan, it's about, making it happen.
Execution, exactly.
So let's look ahead. What does the future hold for them? Are they going to be the next big global tech giant?
Well, I can't predict the future.
Right.
But I do see a lot of potential.
Yeah.
They're in those growing sectors.
Uh-huh.
They're investing in the right technologies. They're expanding globally.
Yeah.
I think they've got a good base for success.
And don't forget about the Indian government and their focus on, promoting manufacturing in India.
Especially semiconductors.
Especially semiconductors, yeah. That's a big help for Kaynes, right?
Oh, yeah. They're in the right place at the right time. It's exactly.
And that new semiconductor facility with the 70% subsidy.
Right.
That's a great example.
They're not just, benefiting from this trend. They're helping to make it happen.
Exactly.
And the global demand for EVs, smart meters, all that stuff.
It's only growing.
It's huge, and they've got, the expertise and the ability to meet that demand.
They do.
And establish themselves as leaders in these new markets.
Yep.
And those acquisitions, I mean, who knows what doors those will open?
Right. New markets, new technology.
And innovations.
The smart way to grow.
So they've got a lot going for them.
They do.
But of course, there are always risks.
Always.
The global economy, it's unpredictable.
Competition
Competition is tough.
fierce.
And technology changes so fast.
Overnight, sometimes.
It's a wild ride.
It is a wild ride.
But, Kaynes Technologies, they've shown that they can adapt.
They're resilient.
They can innovate.
They can overcome challenges.
They're fighters. They are.
And their commitment to doing things well, you know, their focus on the customer and that culture of diversity and inclusion.
Right. Important stuff.
Those are all, those are key to their success.
Absolutely.
So after all this, what's the big takeaway? What should our listener remember about Kaynes Technologies?
I think they should remember that this is a company that's on the move.